Welcome to everyone. This week video will cover the SP500 market for the week of January 27, 2025. Before we start, make sure you read carefully the disclaimer. It seems the cycles run little bit longer than the usually J.M.Hurst nominal model. We will see that in details in the following analysis. But price-wise, all the previous targets have been met. And the SP500 even provide new targets. Let's see what we can expect for the next 3 months. This week we will start by the 40-day cycle. Since the 20-day cycle will be largely covered during the 80-day cycle roadmap analysis. The last 40-day cycle low formed on January 13, 2025. 3 days later on 16, the SP500 crossed above his cycle line at 5,936.27. For a potential upside target at 6,099.23. But to be a valid trading signal, the median price line, the yellow line, have to cross both cycle lines. This happened on January 21, when the SP500 market crossed above the second cycle line at 6,007. For a target at 6,242, forming a target zone between 6,242 and 6,099. The next 40 days cycle low is scheduled for the February 16th. And the market should find support on his cycle line. It's still a little bit too early to know where the cycle lines will be at that time. The 80-day cycle. On January 13, 2025, the SP500 also formed his 80-day cycle low at 5,773.31. On January 23, the SP500 market crossed above his cycle line at 6,058.55, providing an upside target at 6,343.79. The next 80-day cycle low is expected on March 22. Since the beginning of the year, this is the first trading signal for the 80-day cycle. To know what to expect for the next 3 months, let's see the 80-day cycle roadmap. As a reminder, the red dashed line is the 20-day cycle line. In fact, to trade or study the 80-day cycle, we use the 20-day cycle line. For the other cycles, we use the 2 times lower time frame cycle line. Here the 80 days roadmap. After forming his cycle low on January 13th, the SP500 crossed above his cycle line at 5,903 on January 15th, providing an upside target at 6,033. 130 points or 2.25% of potential profits. With a high at 6,051. The SP500 met his target on January 21st. For a profit of $148 or 2.5% in only 6 days. After forming his peak, which is expected around January 25th. The market should start his correction to form his low on January 31st. And find support on his cycle line. The cycle line will be at 6,088. After the 20 days low, the SP500 market should rebound on his way to form his 40 days peak. The target zone for the 40 days peak is between 6,242 and 6,099. The bottom part of the target zone have already been met. When the SP500 market 40 days peak will be confirmed, he will cross below his cycle line and provide a price target for the 40 days low on February 16th, certainly on his cycle line. After forming his 40 days low, the SP500 will cross back above his cycle line on his way to form the 80 days cycle peak. The price target for the 80 days cycle is 6,343.79. Then the market will cross back below his cycle line. The crossing will provide a target price for the 80 days cycle low. The SP500 market will form a first low around end of April. Then rebound toward his cycle line, using it as resistance. Then will resume his decline up to March 22nd, which is the expected date for the next 80 days cycle low. Where the 80 days low will form will be very important. To stay bullish, technically he should find support on his cycle line, then rebound. If he crossed sharply below his cycle line, then there is a very high probability the previous high before the crossing will be the next 20 and 40 weeks peak. and maybe also the next 18 months peak. The next 18 months low is expected in May 2025. The 20-week cycle on the SP500 market. As expected in my previous update, the SP500 found support on his cycle line. As mentioned in my introduction, the 20-week cycle run longer than expected, forming his low on January 13, 2025 instead of December 18, 2024. This 20-week cycle was 23 weeks long, instead of the Hurst nominal model average between 18 to 19 weeks. Because the previous 20-week cycle formed later than expected. The next one will form little bit later, around the 3rd weeks of May. At the same time than the 40 weeks and the 18-month cycle. Around that date we can expect an important correction, since 3 major cycles, the 20 weeks, the 40-week and the 18 months, will form their lows at the same time. In conclusion, even if the SP500 made a new all-time high this week, the 20, 40 weeks and 18-month cycle of the American stock market are in down phase. We can expect more decline until mid-end of May 2025, when the next 18-month cycle low is expected to form. For more details about how the cycles work in the stock market, I recommend to visit my website, Tradingmarketcycles.com. If you like the video, please give a thumbs up, share the video. This will help my channel. Subscribe to make sure you don't miss any important information. Thank you to follow me and see you next week for a new video.